Welcome to the second ever FBA Family Business Panel discussion on Radio Entrepreneurs. I'm Nathan Gobes, producer. In this COVID-19 and family business related April 2021 edition of the panel discussion, we'll be covering topics related to interfamily politics, generational transition, hiring in the family business, entitlement, compensation, and much more. This episode is part 1 of 3, and all of these discussions are intended to be highly relevant to business owners, family businesses, and entrepreneurs of all types. So be sure to follow Radio Entrepreneurs on LinkedIn, Spotify, YouTube, and many of the other platforms we stream on. First, I'd like to introduce our first panelist, a longtime supporter of Radio Entrepreneurs and frequent guest on our show, Rich Hirschen. Rich is a partner at Gray Gray, a regional CPA firm located in Canton, Massachusetts. Rich provides expert guidance for business in tax strategy, compliance, audits, reviews, and complications of financial statements, revenue recognition procedures, strategic planning, management reporting, and analysis. Next on our panel is Stephen Wilchins, a founding partner and attorney at Wilchins, Cosentino, and Novins, with over 42 years of experience serving businesses and estate planning needs of families, individuals, and owners of large, closely held businesses. Stephen has also co-founded several businesses himself and currently serves on 7 privately held boards in several different industries. And our third panelist for this segment is Roberta Sidney, a second-generation family business person and president of Sidney Associates. Roberta serves on the boards of Plaxall Inc., a family real estate business in its 3rd generation, where she chairs the compensation committee and serves on its governance committee. She also serves on the board of Azalea LLC in its 2nd generation and has vast experience in many other organizations in a wide variety of industries. Welcome, Rich, Stephen, and Roberta.
Welcome.
And finally, I'd like to introduce the panel's moderator, Radio Entrepreneurs host and president of Mage LLC, Jeffrey Davis. Jeffrey is regularly called upon by his clients, contacts, and the media as a resource on change, strategy, and managing the challenges faced by entrepreneurs, leaders, and family business owners trying to succeed in today's shifting world. Welcome, Jeffrey, and I'll hand the conversation over to you.
Thank you very much. And I don't want to offend anyone. I haven't been the president in about 20 years. That's Jonathan Friedman. I'm the CEO. So I just in case Jonathan.
Apologies, Jonathan.
I don't want him to think I'm taking his position. So that would be a transition by decree. I think this is a great panel, a lot of experience on this panel. I want to start off, with something that I'll even quote somebody. I worked for many years with Bob Rosenfield of J & Phillips, a great business, built a great company. And he used to talk to me about wanting to run a meritocracy, and not just an entitlement business. And so I want to ask all of you your opinions about how does someone earn their stripes in a family business? That's where I'd like to start, because I think that's important. Not everybody understands that. And I don't know who wants to take that first. It's a free-for-all to start.
Sure, I'll kick off if you like.
Great.
Great to be here with all of you today, and thank you so much for asking me. I think who you promote and who gets rewarded is extremely important to any organization, whether it's a family business or a social enterprise. And culture is the DNA of the organization. So it is extremely important, whether it's a family member or a non-family member, that there are rules of the road and rules of engagement when it comes to access to employment and access to development and promotional opportunities. So that's the first thing that I would say is earning your stripes, especially if your last name is the same last name as the founder or the company or the family that owns and controls the enterprise. It's critically important that it not be a made up job for sonny or daughter or cousin or whomever, that it be a real job with real skills and real needs, and that you, as the potential person who's coming in to take that role or move up in that role, that you have the skills or have the opportunity to demonstrate that you have the skills to take that on.
Right. I think what's very important is that it's important not to have different classes between a family business and family members and non-family members. And I think one way to establish that is right up front and setting up some type of employment policy with the family and what the clear expectations are of family members if they come into the business. And they should be treated the same way. Their expectations, their compensation, the rules should be adhered to the same, whether you're a family member or non-family member.
Yeah, I agree with both of you and think that it's key. I mean, I think a family member or non-family member should be treated like an employee, and they need to earn their way up and provide good work to the company and be accountable and do all the things that would earn them the promotion. And that's it. They should be earning their way through the company, not just entitled to it because they have the last name of the owner.
Right.
I think the earning is important because, without naming people this time, and I once had a family member that said to me, I need to run this company. And I said, why? And they said, because my name's on the door. And I went, well, that's not necessarily a criteria for the whole thing. And that relates to me, Steve, and all of you, to the whole idea of an operating agreement that everybody abides to. And I think that's important as well. Do you agree with that, Steve?
Yes, an operating agreement, a well-drafted operating agreement, but also an employment policy, family employment policy, where it's clear what the expectations are for the family if they decide to enter the business.
What are some of the ramifications in terms of a family business of elevating, let's say, certain family members into a leadership role? I'm not trying to pick on you first again, Roberta, but you were a family member that was elevated in a family business, and I was as well. And, automatically it put a target on my back. I don't know what it did for you, but what do you feel about those types of things?
Well, again, I think that you have to deserve the role. You can't be in the role because of your last name. In my case, I certainly had the technical and other skill abilities. This was a construction company I was taking over for my father. And then I ended up opening my own business, which was a real estate development company. But I have degrees in real estate. I got a master's degree from MIT in the field. I have an MBA from Harvard. I worked at that time already probably a dozen years for other large organizations. So I had demonstrated the ability to be a leader and to be a successful business person. So I think that helps. That being said, it's not sufficient because there are always dynamics with other people. In the case when I took over, my middle sister, and there are 5 in my family, but my middle sister was already working there and she was going to need to report to me. And so there were things that we needed to work out. And so I think it's complicated. And I'm happy to talk more about sort of compensation and whether it should all be the same or not if you're family. I have strong views on that. But I do think some of this is part of, do you have the qualifications? Do you have the skills to do the job that you're being asked to do? And in some cases, it was, in my case, it was a medical necessity that required some type of intervention. And it was a voluntary thing. I mean, I wasn't drafted, I did volunteer, but somebody needed to do something. So we either needed to close the business or someone had to take over in order to keep it going because of this medical event. So there was clearly an event that precipitated. And I would say, even despite some of the difficulties that we've had as a family, and we all do get along, and we are connected, I think people would say that I did a good job. Come in, and I'm not sure that anyone would have been the right.
Sorry about that. That's not my technical difficulty. I think that's the result of Zoom. But I think you bring up a couple of very good points. First of all, I constantly see family members who have issues reporting to each other, and they don't see that. They see it as the family. In the family, we were equal, but in the business, we have to be equal as well. I don't think there's equality in business. And then the whole compensation issue, you're right, you're opening it up, and that's going to be part of another segment that we're going to be talking about. But Rich or Steve, do you want to address any of the points that Roberta brought up?
Yeah, I think one thing is if it's large enough, I'm not so sure comfortable with a family member reporting to another family member. I think it creates its own issues in itself based on, things outside of the business. So to the extent that a family business is large enough and could, separate family members, I think that's healthy because there's more objectivity into it. I also feel that we shouldn't confuse family decisions with business decisions. And often in situations like that, they get clouded and mixed. And I think a good leader, effective leader, and I understand Roberta has been a wonderful leader, you were able to ascertain and synthesize the issues and to determine what's effective for the business itself versus what's effective for my family. So I think that needs to be really thought through carefully when you have family members entering the business.
I agree with you, Steve. I don't think it's ideal for family members to be reporting to each other. Sometimes I think it can't be helped, but one thing I think is great for family business, if you can have a board of directors or some kind of committee of people outside of the family, or having some members be outside the family, whether it be consultants that become trusted advisors, or accountants or attorneys, whoever it may be, or other people that just have industry experience, and have some of the real senior leadership, and especially the family members, reporting to that body so that they can be making decisions on what's best for the company and not be blurred sometimes by it's my son or my daughter or some relative. So I think trying to get outsiders in the governance of the company is a really good idea for family businesses.
Mm-hmm.
I want to pick up on that, Rich, because I think that's essential. If that's okay, Jeffrey, if I jump in here. That was critical for us. It was absolutely critical to create, and we created actually several circles. We had, what we called the board, which was what we called the asset council. We also created the family council, picking up on Stephen's point that you have to have family issues resolved over here and business issues resolved over there. In our case, we unfortunately had to create a third circle, which we called the care council, because there were so many issues about the medical needs for my parents. But having that outside perspective and having the ability to ask people who could be objective sounding boards and be part of certain decisions was critical to the success and the dynamics. So I can't say strongly enough how much I would encourage every family business and every business, quite frankly, to at least have an advisory board, if not a fiduciary board. Super important.
I just want to interject on there. I'm a firm believer of that. I'm actively involved in a number of large businesses. But the leader of the company needs to set a clear agenda, needs to be prepared, needs to have, an understanding that it takes work to have an effective board. And the board members need to be engaged. This is not just for, having a dinner or a nice lunch. This is really effective work. And you need to compensate the board of advisors or board members appropriately, depending on the situation. If you want their input and you want them engaged in particular parts of the business.
In the last part of this segment, and I agree with all that. I believe in the corporate governance council, board of directors. I love that you brought up family council. I think that's got to be looked at separately from a board or board of advisors. Family council I found to be very practical in a family business. One thing I do know is that a business has to be set up to make decisions. And if they're being made like a family without necessarily the best interests of the business, that leads to conflict. So I ask for those who want to do it, if they want to give an example, and I'll give one example for myself. I'll start first. I worked with a company that had 6 family members involved in the business, some working more than others. And they went to a particular point where they had lost about 70% of the revenue of the business, and they could not make a decision as a family. Everything was sort of a split decision. So everything was a stalemate. And creating that board of directors, board of advisors for that company with a voting process where there were vote breakers involved in the process, I found to be very helpful for the company, and it really helped them to move things along. It did create some family strife, but there was family strife before. So it was just a different type of strife. So I don't know if anybody else wants to add any other examples in the limited time that we have.
Yeah, I'll add something. So what was interesting is I sat on the board of a client. It was a distributor, a large construction distribution company. And there were family members in the business, but the board realized that the president and family member really couldn't take the company to the next level. And as the board, it took us a year and a half to convince the owner that it would be right to sell. And it so happened there was some roll-ups in the industry, and we were able to convince the board member, the owner, to sell. And it took a long time, even though his son and his daughter were on the payroll and there was opportunities. What happened was he made more money from the roll-up after he sold from this private equity company that bought the company. So, forever he's thankful when he looks back that he made the decision to sell the company, which was fabulous. So it was great for the family.
Yeah, I'll give an example from my own experience. So I can tell you in my family's business, we had similar decisions to make at certain times, and one of them was about selling a certain building. So you just made me think of this when you mentioned that, Stephen. And so what we did was we engaged, using our outside directors, engaged with them to kind of help run the process so that it would be above the board, transparent. No questions about, oh, you're putting your thumb on the scale, or you're somehow manipulating the numbers. And it made for a much smoother process because, again, they were objective. They were not benefiting one way or the other. And so it really smoothed out what could have been a very contentious conversation, or conversations, plural.
Any closing comments from anyone on this segment? No. Nathan?
Thank you, everyone. That was a really great conversation, and we look forward to more comments in parts 2 and 3. Links to the other parts will be included in the video description below, or if you're listening to the podcast, make sure you have subscribed so that you can catch the next segments when they go live. We'll be back with more of this panel discussion on Radio Entrepreneurs.